Okay, in the previous video, we're working on the production budget. At the end of the production budget, we have the selling and administrative expense budget, where we have to take a look at each expense of the office. These are expenses of the office, so of salespeople, accounting people, various people who are not working in the factory, they're not working on the product. Okay, these are our operating expenses. So we need to go through those, and each expense that we have has to be decided whether it's variable, such as supplies, or maybe sales commission given to salespeople, or fixed, such as depreciation and rent and such. So we go through each one of those, and we estimate the expected cost for each operating expense for each quarter listed in the budget and total the columns. So here we're looking at the number of units to be sold, not the number of units to be made, but the number of units to be sold. To be very careful when you're talking about the units, whether you're talking about those that are sold or those that are made. So this came from our sales budget, how many we were going to sell each quarter, and that we were going to sell 5,700 shirts for the year. Now, in your book, they told you that there was 10% variable expense. This would cover things like sales commission, or various maybe supplies or things that get used up. The more that we sell, the more that there are of these things. So especially sales commission that we have to pay to the salespeople. The more they sell, the more commission they get. And so those are variable. The variable selling and administrative expense per unit, okay, per shirt in this case, is 10%. So if I'm going to sell 1,000 units times 10%, that means I'm going to have roughly $100 of variable expense. Then my fixed selling and administrative expense for depreciation, etc., for each quarter is listed here as well. These numbers come from your book, and so then we add them together, the 100 of variable, the 1720 of fixed, and we get 1820 total selling and administrative expenses. Now, this budget can be a lot more expanded, listing out all the different expenses and such. In this video, I just have the main totals on here. So our grand total of variable selling and administrative expense will be $570. Our grand total of fixed selling and administrative expense for the budget is $80.80. So grand total of selling and administrative expenses is $86.50 for the year, for next year. Okay, we also need to complete a financial budget, which includes a cash budget and the budgeted financial statements, such as the budgeted income statement, the budgeted balance sheet, and the budgeted statement of cash flows. For the cash budget and the budgeted income statement, I have a separate PowerPoint and videos on those. And we also finally have a capital expenditures budget that's going to need to be done. And this budget looks at the long-term assets that we expect to purchase, such as factory equipment, or if we're going to expand to a different country or something, we're going to have to get buildings. Okay, so the big ticket items that we're going to have to invest in, we need to map those out well ahead of time and start figuring out how we're going to finance those, what they're going to cost us and how much they're going to finance, how we're going to finance it. So if your car is getting ready to die, okay, you know that you're going to have to get another car. And you know approximately when you're going to have to get the new car, and you're going to have to start looking at them, and you're going to have to start looking at financing. So that's what this capital expenditures budget does. Management has to look at what kind of long-term assets we're going to expect to have to purchase next year, maybe for the next couple of years, and how much those things are going to cost. They have to look at various things like, well, do we want to lease that equipment or do we want to buy the equipment? And how are we going to pay for these assets that we need? So we're going to talk a lot more about capital expenditures when we talk in chapter 12.